This chart that you're seeing right now is of a stock that I've been wanting to own in my portfolio for some time, and I've never gotten the opportunity to, because as you can see, it's always been above this gray line here, which is the average intrinsic value, and recently it just went below it. Now, judging by the price, you probably already know what stock this is, and we're talking about Microsoft stock. I am invested in this stock. I'm going to show you now in a second. I think I did get in a little bit of a high price because I just wanted to own the stock for the longest time. However, I do see a lot of potential upside, and there are a lot of financial analysts that have been improving the rating of Microsoft and setting a target of, as you can see, 540. Now, this isn't financial advice, and I'm going to be 100% transparent with you guys. As you can see, my average cost on this stock is $420. I own about 16 shares, which is 42% of my portfolio. I know right now you're thinking, this guy is crazy, let me dislike the video and log off. But the reason for this is because I sold all the other stocks. I had Amazon, I had Adobe, I had Salesforce, and I just decided to get rid of them. I'm going to start rebuilding my portfolio. I took my profits. I'm good on that. So I'm going to restart all over again. I know it's not the best thing to do. You should always invest for the long term. But I was down almost $1,000 on this stock, and now we're about to break even. I have a total value of about $6,700, and I do expect this stock to go over the $500 mark. Now we're going to take a look at the intrinsic value of Microsoft in a second, but first let's compare its price to its EPS. As you can see, its EPS have been increasing over time. However, the price is dropping. If you've been following the channel and if you've seen the channel before, this is something that I love in a stock. When their financials keep improving, but for some reason the stock price is going down. In this case, it was because a lot of software stocks like Microsoft have been going down due to the fears of AI. However, I still do believe in the company fundamentals, and as you can see, the price to free cash flow, again, the free cash flow is increasing even though they had a lot of capex investing in AI. As you can see, the free cash flow is still there. However, the price kept decreasing. And this is going to be the same. You're going to be seeing this throughout all the other metrics in terms of, for example, price compared to the shares outstanding. Usually you want a company to have less shares outstanding. That means your piece of the pie is a lot bigger. This is the case for Microsoft. They have been declining very, very slowly. However, the price is still dropping. Now, if we go ahead and take a look at the revenue, a very important metric, you can see that the revenue has been increasing over time, which is great to see in a company, especially of this size. However, again, the price is dropping. And again, the gross profit, another very important metric. This is great based on the fundamentals. As you can see, it increased as well. We saw the price is dropping. Same thing is going to be for the operating income. And then the same thing for the net income. Just look at this jump from here to here. If this was at any other time, any other era in the stock market, the stock would have jumped. But of course, not now due to the fears of AI. So that's why I think investing in this company now is a great opportunity. However, this is not financial advice. This is just my own opinion. Now, if we want to take a look at the rest of the metrics, just in terms of increase of percentage, we can see revenue is up 15%, operating income is up 17%, net income is up 16%, and operating cash flow at 50%. If we take a look at the overall financials based on the free cash flow for the year, they are down 3%. But again, guys, this is because they are doing a lot of investments due to AI. Some of the investments are going to be data centers. As you can see, Microsoft now has $665 billion in assets compared to only 274 billion in liabilities. And then if we take a look at the overall company efficiency, I mean, if you take a look at the free cash flow margin is sitting at 25% even after all those investments. And then the rest of the company, I mean, gross margin 68%, return on capital employed, I mean, everything here is just beautiful. This is a company you want to own. That's why it's such a high percentage of my portfolio. However, that will change. This is not going to be more than like 15% of my portfolio, not because I'm going to sell out of some shares, but because I'm going to be investing in other companies. That's going to bring that percentage down. Now, this is what analysts are forecasting for the stock to be worth. This is not the intrinsic value that we're going to be taking a look at. They have a low forecast of 395, an average forecast of 600, and a high forecast of $765. Now, this is something that I love on a stock. Microsoft has two things, I'm sorry. They have a dividend yield, which means they're paying dividend. This is good to me as an investor. They have a buyback yield. Although it's low, it's good that they're buying back their own shares. That means they believe at the current price the company is worth buying back so that in the future they have more profit. And if we take a quick look at this year-to-date chart on Microsoft, we can see around Friday of March 27th, this stock was about $356, which is the best time to buy. Of course, you don't know when is the best time. You never know when is the market. That's why I was averaging down my cost. However, I did start buying all the way up here around the 450, 430 mark. That's why my average cost is 420. However, Microsoft is a $3 trillion company sitting at a 25 PE. In today's market, this is crazy. They just recently beat their earnings by 5.69% and the revenue was beat by 1.20. Might not seem like a lot, but again, guys, this is a 1% growth of 3 trillion. That's a lot of money. Now, if we take a look at the intrinsic value for Microsoft and we start at a base case scenario, the stock is still considered to be overvalued at 4%. On a worst case scenario, it's overvalued at 28%, meaning the stock is actually worth about $295. And the best case scenario, the stock is worth at an undervaluation of 26%, giving it a stock price of 554. I'm aiming for the stock to go to 500. I'm probably going to close out there. I know I say all the time to invest for the long term, but it has just been working for me. As you can see throughout the whole history of my portfolio, I currently only have a $25,000 portfolio, or close to $25,000. However, my profit has been of 42%, which is about $7,000. So if it's working right now, I think I'm going to continue to do this. I also have the Vanguard Growth ETF, which has a lot of the other stocks like Meta, Apple, Microsoft, and Google. And I want to be exposed to those companies as well. As you can see, I have 11 shares at an average cost of $449. And I do invest for the long term in my Roth IRA, but in my personal investing portfolio, I want a lot more risk. This is why I'm doing this now. So if you enjoyed the video, please consider leaving a like. Don't forget to subscribe. And as always, I'll see you on the next video.